afternoon, everybody. Who here is staying at the Clevelander? Okay, good. So you guys will know that the music stops at 5 a.m. and it starts at 9 a.m. So you'll have to bear with me. I'm still nursing a little bit of a cold here. So welcome, everybody. My name's Harry. I'm the managing partner of Binary Financial. I'm just going to try to figure out how this thing actually works. And welcome to the afternoon session on active Bitcoin trading strategies. So in this talk, I'm actually going to cover a couple of topics. We're going to go over Trading 101, fundamental analysis, technical analysis, references, and Q&A. So what I actually want to do, give you a little bit of a background about myself. So I'm a trader first and foremost, and my background actually comes from software engineering. And what I'd like to do is get a show of the hands in the audience. How many of you here have actually traded stocks, options, or currencies? Please raise your hand. Okay, great. How many of you that actually have traded use an advanced trading platform like Thinkorswim or Interactive Brokers? Okay. So it looks like most of you in the audience, with a very select few, actually don't trade on advanced platforms. How many of you here actually own Bitcoin? Please raise your hand. Okay, great. So the purpose of this talk is I want to give you something that you can actually take home with you and actually use right away. Because I think if you're going to be buying any kind of asset class, whether it's Bitcoin or stocks or options, you really, really need to know what you're doing. So most people will just buy Bitcoin and just buy and hold, and they don't really have a plan. Today I'm going to give you a plan on kind of actually how to make money, how we actually at Binary actually use a lot of these techniques to actually determine when we're actually going to buy Bitcoin. So something you can actually use today. It's going to be practical knowledge. Okay, so Trading 101. What are we going to cover? First off, we're going to talk about where's the price of Bitcoin going to be. Then I'm going to talk about different ways that you can actually trade Bitcoin. Then we'll talk about terminology, and then finally we'll have a little talk about trader psychology. So where's the price of Bitcoin going to be? This is like the only question I get asked on a daily basis consistently. Like, Harry, why is the price of Bitcoin so high? Why is the price of Bitcoin so low? And then my answer is like, well, typically when the market has more buyers, then the price goes up, and then when the market has more sellers, then the price is going to go down. That's actually my answer. But the reality is, it's important to know where the price is going to be, because if you don't know where the price is going to be, you don't know when to buy, when to sell. So where's the price going to be? Well, there's only really one answer. It's going to the moon. That's what we all believe. That's why we're all getting into Bitcoin, right? That's like my favorite chart. And then I just kind of put this up here. I think it's important to know about the Bitcoin wheel. This is actually a very, very bullish signal. This is a good time to buy. So where is the price of Bitcoin going to be? How do we at Binary determine where the price of Bitcoin is going to be? Well, we use a combination of fundamental analysis and technical analysis. And then we also implement a little bit of trend following that's part of technical analysis. So different ways to actually trade Bitcoin. So Bitcoin's a very, very unique asset. It's not like a stock or commodity where you can just jump on an exchange and trade it. Bitcoin is very, very unique in that I can buy Bitcoin from anybody in the audience, and then I can sell it right away on an exchange. So that's actually what's really, really unique about Bitcoin. So we're going to talk about the different money-making methods that you can actually use to make money with Bitcoin. Then we're going to talk about all the different exchanges that you can actually trade on. We'll talk a little bit about over-the-counter. And then finally, we'll talk about arbitrage, which is actually a very, very unique piece of trading that's particular to Bitcoin. So different ways to make money trading Bitcoin. Well, before there was futures and shorting, really the only way you could make money with Bitcoin is you would buy when the price is low, and you would sell when the price is high. So buy when the price is $100, and sell at the price of $120. And then I think last year, Bitfinex actually introduced margin trading, which is essentially you can borrow Bitcoin from another party, and then you can actually sell short Bitcoin. So you can actually make money on the price of Bitcoin when Bitcoin goes down. And that's actually what's caused some of the price volatility is when people short Bitcoin or there's margin calls, typically their positions will get pulled, and then it causes more selling. And then what's kind of been developing the last year that we're very, very excited about is the futures trading. So futures trading, derivatives, these are all part of the Bitcoin ecosystem that we believe are actually going to help mature and keep the price up. Because if I'm a miner or if I'm a payment processor, right now my only option is I really can't hedge. So if I can't hedge, if somebody wants to cash out into US dollar with Bitcoin, then I'm going to have to actually sell. So that creates selling pressure on the market. So the futures and the derivatives market and the options market are actually different ways to make money in Bitcoin without actually trading Bitcoin itself. So exchanges, what exchanges do we use? Another question I get asked all the time, Harry, what Bitcoin exchanges do you use? And the answer is we trade on all of them. And why do we trade on all of them is because we believe in having relationships with everybody. So if you're new to trading and you're looking for an exchange to trade on, every one of these is a great exchange to trade on. So, there's Bitstamp, there's Bitfinex, and, congratulations to the Bitstamp guys, like the first ones to implement multi-sig with BitGo. That's like a huge, huge step. We've been pushing every exchange to actually do that for a very, very long time. There's Bitfinex. Bitfinex is a great platform if you want to do shorting. ItBits, more for institutions, and then, ANX Pro, OKCoin. We also trade on them. Like, OKCoin's a great company. CoinSetter as well, BTC China Huobi. I mean, every one of these platforms is a great trading platform. And the thing I love about Bitcoin now is that a year ago, you really only had Mt. Gox and Bitstamp, but now you've got so many different choices to actually trade. You can trade renminbi, you can trade euro, you can trade US dollar, and all these different exchanges. And then over-the-counter. So what's over-the-counter trading? I just put a picture here of like money counter and cash. But over-the-counter trading is essentially that it's not on exchange. So for example, somebody wants to buy 500 Bitcoins from me, and it's not actually on an exchange, and we do it over the telephone. That's actually an OTC trade. And another OTC product that we actually offer at Binary that's actually very, very unique. This one's actually designed for like high net worth clients and institutions. We partner with BitGo on this. So essentially if somebody wants to, like a family office, they want to buy $5 million worth of Bitcoin, but they don't want to deal with the wallet setup. They don't want to deal with the hassles of storage, liquidity. It's basically a concierge VIP liquidity service. That's what BTC01 is. Okay, arbitrage. What's arbitrage? So the definition of arbitrage is the simultaneous buying and selling of the same commodity or asset in one different, it's the simultaneous buying and selling of the same commodity or currency in one market and selling it on another. So for example, Bitcoin, you'll kind of notice, everybody knows about arbitrage in Bitcoin. You can buy Bitcoin from somebody in the audience for, let's just say, $150 and then sell it on an exchange right away for $160. That $10 spread is what you call arbitrage. Terminology. What are some important pieces of terminology you need to know about when you're trading? You need to know about the bid. When you talk about buying or accumulating position, you're talking about a bid, offer, buy, and going long. And then if you're selling, you're talking about an ask, sell, or short. So these are important terminologies that all traders use. Trader psychology. I cannot stress how important psychology is when you're actually trading. When you're trading, it's very, very important to always cut your losses quickly and let your profits run. Many of you have bought Bitcoin that actually know this. You think that it's going to go to the moon, but the price moves against you and you don't sell. That's not learning to cut your losses quickly. Letting your profits run too, and we'll actually show you this later. Letting your profits run is also very, very important because we buy breakouts. When there's a breakout in price and you're not letting your profits ride, you're basically minimizing the amount of profits you're actually making. And then as a trader, you must have an exit strategy. There's no point of actually buying anything if you don't sell. If you don't have a plan to ever sell, then I just suggest not getting into something in the first place because you're not actually realizing profits or losses until you actually sell or buy or close the position. Okay, fundamental analysis. What's fundamental analysis? So fundamental analysis is basically the study of like macroeconomic events and news primarily when you're talking about Bitcoin. So for example, if the US regulators, like the bit license goes well, that piece of news is very, very bullish. It'll cause the entire market to kind of lift. And then by vice versa, like if you have like a negative news event, like an exchange gets hacked, that might cause the price to go down. So when we deal with Bitcoin, we follow the news very, very carefully. And where do we get our news sources from? The reliable ones are really a Zero Block, CoinDesk, and Google News. Bitcoin Talk and Reddit, it's good for entertainment. I don't really recommend you get your news from there. There's a lot of trolls, a lot of scam coins, altcoins, that kind of thing. Okay, technical analysis and charting. So this is the second part that we're going to use for all the techniques that we actually use. And technical analysis is a little bit more in depth because it causes you to actually study one thing that's common amongst all asset classes, which is price. The thing that stocks, commodities, futures, options, one thing everything has in common is price. That's why when people ask me, Harry, what do you care about? The only thing I care about is price. I don't care about anything else because price is what's going to determine whether or not I make a profit or not. Sorry. So what is technical analysis? We're going to go over that, the different types of tools that we actually use for trading, the types of charts and data. Then I'll go over a couple of technical indicators that I think you need to know. And then finally, we'll go over chart patterns. So what is technical analysis? Technical analysis is the study of patterns, charts and patterns to determine where the price may actually go, whether it's going to be up or down. Many of you might have heard this term that, past performance is not indicative of future returns. Well, when you're talking about trading, past performance is actually a better indicator of how something may perform. And also, it's important to know that when you're trading, there's this thing that we traders call a self-fulfilling prophecy. So what is a self-fulfilling prophecy? Well, most traders actually that trade in the room, they look at charts. So if I'm a trader and I'm looking at a chart and I see that somebody's buying, like somebody's coming in and they're doing a big buy order, I will actually execute and buy on that order. Well, if I'm buying, then other buyers see that, hey, look, volume's actually increasing. Even though the price wasn't planning on going up, because you have all of these events actually happening, it causes the event to actually become true. And that's what's called the self-fulfilling prophecy. So what are some of the tools that we use for trading? We use RTBTC. Primarily for trading on Bitstamp ANX Pro. And then we also use Bitcoin Wisdom, which is a very, very good tool. I'm sure most of you have actually used it. And then BFX Data is one that we just started probably recently using about 3-4 months ago. That's actually really good. This is specifically just data on Bitfinex. So there's a screenshot of RTBTC, their trading platform. So RTBTC is probably the closest platform to an institutional trading platform that's got all the charts and data, the order book, visual depth, all the things that you actually need to really make good decisions when you're trading. And then Bitcoin Wisdom as well is actually very, very good. And then BFX Data. BFX Data is a great place to actually use, even if you don't trade on Bitfinex, I recommend looking at BFX Data because they have a very, very useful section called the swaps. So swaps are actually a very, very important piece of data to actually look at because if more people are borrowing US dollar, it means that they're very, very bullish because they're borrowing US dollar to buy Bitcoin. And then vice versa. If more people are actually paying more interest to borrow Bitcoin, that means they're potentially thinking the market's going to go down, so they're shorting Bitcoin. Okay, so the different types of charts and data. Charts that you actually really, really need to know, 3 basic charts that I think every trader or every person trading Bitcoin needs to know about. You got to know how to read a Bitcoin price chart. You got to know how to look at the visual depth and order book. And then finally, the time and sales. So what's a Bitcoin price chart? Well, Bitcoin price chart is very, very easy to read. For most of you don't know, so this is actually 4 different time periods. When I'm trading, I look at 4 different time periods. The one on the top left is the weekly. The top one is the weekly, then you have the daily, then you have the hourly, and then the 15-minute. Why is it important to look at different time periods? Well, it's important to look at different time periods because you got to know what your time trading window is. We have trades that might last a month to 2 months. That data is very, very different than if your trade is going to last 5 seconds, 10 minutes, 1 day, or 24 hours. So these are things that you need to know. So first off, you need to determine, okay, when am I going to get in and out of position is going to determine what time frame you're looking at. We look at all the different time frames because all the different time frames just gives you more data. More data points gives you better decisions. And this is just something that we use. We look at all the different types of data, different charts. So for example, if all 4 time periods are very, very bullish, it gives us better confidence that it's better to open a long position. The visual depth chart and order book. This is actually a very, very important chart to look at. Most people don't even know what this chart is, but I'm going to give you like a crash course on what this is. It's very, very important to look at. If you take a look at the order book on the left, and you take a look at the chart on the right, the chart on the right is actually a visual representation of what's here on the left. So when people say to me, hey, Harry, I want to sell 1,000 Bitcoins, can I get the spot price? And I tell them, well, it's very, very hard because at spot, the price is at 629. But in reality, you only have maybe 0.1, you maybe have like up to 20 Bitcoins at 626. If I actually want to sell up to 1,000 Bitcoins, I'm going to have to sell all the way down to about 600 or 615. So that's actually what's called slippage. Slippage is when you actually want to sell a certain position, but you don't have, there's not enough volume to actually fill your actual order, so you have to wipe out, a lot of other bids down the way. That's actually called slippage. That's why the Bitcoin bear whale, when they actually came out, it was a great buying opportunity because, somebody's offering 30,000 coins at a single price. It means that if I wanted to buy 500 to 1,000 coins at a price and not move the market, that's the best time to do it. So time and sales. For those of you that have actually traded stocks and options, I did some day trading before. So in day trading, we use this technique called reading the tape. So the time and sales is actually important because it's a way of actually reading the tape. When you're looking at this, if the price is scrolling down, you see a bunch of green, it usually means it's all buying. And then conversely, if the price isn't really doing anything, then the market's not really moving. So this is almost kind of like a real-time indicator of kind of what the market's actually doing. So it's actually quite fun to watch when it's very, very bullish or bearish. You'll see either all red or all green. Okay, technical indicators. So what are 5? There's actually, I think there's probably hundreds of different technical indicators that you can actually use, but we really, really focused on 5 for the beginners. You got to know how to read a candlestick. You got to look at the volume indicator. Exponential moving averages are very important. Then you have stochastics, which is a momentum indicator determining, if the momentum's going, bullish or bearish. And then you have the relative strength index, which actually tells you if an asset's like overbought or oversold. So what are candlesticks? Well, candlesticks are very, very easy to read. I recommend using them on your charts. When the candle is green, that period typically means it's it's all buying in that period. And then when it's red, it means it was selling in that period. Volume indicator. Why is volume important? Well, if there's no volume, typically it means nobody's really buying or trading. So the price tends to not move that much. You will also notice that on high volatility days, that's when there's the most volume. As a trader, we love high volume and high volatility days because anytime the price moves, that's when we can capitalize and we can actually profit. So this last week was great. Exponential moving averages. So the exponential moving average is actually a lagging indicator. It's actually really, really good for, I find, a long-term trading. And actually, I tell people this is probably what gave us like the balls to hold when we were trading China last year. So at one point, we couldn't arbitrage or trade the price of Bitcoin faster than the price was going up. So we look at the 10 and 21 exponential moving average. So you'll see that there's a yellow line above the purple line. Essentially, when the yellow line's above the purple line, it's time to buy. And then when the yellow line's below the purple line, it's time to sell. I know it's literally that easy. Like just look at the line. If it's above or below, it's a buy or sell. And then if you look at different time periods, whether it's the hourly, the weekly, the daily, or the 15-minute, and you put them all together, it gives you a very, very good view of kind of what the market is actually doing or might actually do. So stochastics, why is stochastics important? Well, it kind of shows you the momentum of kind of where the price is going. So when the line is going up, it means the momentum is very, very bullish. And when the line's going down, it means it's very, very bearish. Sorry, 1 second. Okay. And then finally, we've got the relative strength index. Relative strength indicator. So this actually tells you if an asset is actually overbought and oversold. And you'll notice I use the word asset because this actually applies to everything. So if you're not just trading Bitcoin, you want to trade something else today, you can actually use the exact same things for trading everything else. So if you take a look, when the line is at the very, very top, it means that the asset's overbought. If it's overbought, it means that there could be a very, very violent correction. So anytime, it's important to look at the RSI because it usually means a correction is actually coming. Okay, chart patterns. So we're going to finish off with chart patterns. So there's 4 chart patterns. I mean, there's a lot more, but I think there's really, really 4 chart patterns that if you're beginning trading, you should know about. So the first one is parabolic, which is everybody's favorite, which is like, so when you're going to the moon, that's actually a parabolic chart pattern. But what you need to know about a parabolic chart pattern is when to get out. Because a parabolic chart pattern means if it goes up really, really fast, it's going to come down crashing really, really fast too. And this is actually a pattern that's very, very consistent with penny stocks. So a good friend of mine, Tim Sykes, he's actually a very, very successful penny stock trader. And we always look for this pattern when we're trading Bitcoin because people just don't get that, every time somebody buys, like buying can't last forever, so you just really, really need to know when to get out. So parabolic chart pattern, very, very important to know. The next one is actually called the dead cat bounce. I got that picture off the internet. That was kind of cute. So a dead cat bounce it actually happened this week when the price was at 200, and I think I was with, is Steve Waterhouse here? Is he? Okay, anyways, I was with Steve Waterhouse at the Battery, and then we looked at the price of Bitcoin, and I think it was at $200, and then 5 seconds later, it was like at 150. And then like about 2 minutes later, it went back to 180. That's actually a perfect example of what's called a dead cat bounce, is that the price sells so quickly that it ends up bouncing and then going back up. I don't know why it's called dead cat bounce. I think the trader terminology is that if you threw a cat off a building and he died, it would actually bounce. But I don't suggest anybody try it. Okay, then finally, sideways action. This is the most boring pattern for traders, but it's important to know because this is when the price doesn't move. It'll be stuck in a range for, God, a few days. And actually, I think even the beginning of last year, in May, the price was actually stuck between, from April to June, the price literally did not move for almost, I think, a month. And then, the news would start writing that, the Bitcoin's matured, the volatility's gone down. As soon as they did that, boom, the price went down and, So it's important to know about sideways price action because sideways price action will actually help you determine when the next big price move is going to be. Sideways price action is actually a consolidation pattern. So anytime a consolidation pattern, you can think of it kind of like somebody's winding something up. And when there's going to be a move, if it's been sideways for a very, very long time, there's going to be a very, very violent move. So it's important to know. And then finally, this is not really a chart pattern, but this is almost a gimme. If you guys see this, this is a very, very bullish signal to buy because it means that once that buy wall is taken out, the price is going to go up. And conversely, if you see a big buy wall, so that's a sell wall. But if you see a buy wall on the other side, that's actually a very, very strong sell signal because if everybody's trying to get rid of their Bitcoins and selling it right away, that wall is going to disappear and the price is going to go down. So very, very important to know these chart patterns. And very interesting, too, if you take a look at the circle there, the price basically didn't move for about 4 hours. I think we were in Vegas when this happened. And then finally, some references that you can actually use. If you guys want the slides after, talk to me or talk to somebody like Mo. Bitcoin Wisdom, Zero Block, CoinDesk, and BFX Data are actually really good references that we use for trading. And then books that I personally recommend that you should read. So my friend Michael Covell, he's an author of a really, really good book, like The Turtle Trader and Trend Following. Very, very good book. And then Trading for a Living, psychology, trading mindset, and money management. I think it's very, very important whether you're trading Bitcoin or anything else. And finally, Binary Financial, who are we? So we're actually a US-based hedge fund. We focus mostly on electronic trading, prop trading, and electronic market making. And a big chunk of our business actually is we facilitate large block trades for high net worth clients and institutions. So if somebody wants to buy $5 million worth of Bitcoin, they want to add it to the portfolio, they come and talk to us. We're also a trusted counterparty. And we've made some investments along the way. One of them is actually Bitfury. And for any of you in the audience, if you have somebody that wants to buy a lot of Bitcoin, feel free to come talk to me afterwards. We'll look after you. And then if you want to contact me, you can add me on LinkedIn, follow me on Twitter, or shoot us an email. And then we'll open it up for some Q&A after. And then I just want to thank Mo and the North American Bitcoin Conference. And Mo took my camera when I was at the Bitcoin conference, or the Bitcoin Bowl, and took 50 selfies of himself. So here you go, Mo. Your duck lips. Okay, that's it. So how are we doing the Q&A? Is there a Q&A session or? Okay, we've got 3 minutes for Q&A. Is there does anybody have any questions? No questions. Oh, there's a question. Oh, there's questions right there. Okay. Can somebody give those handsome gentlemen a mic?